Yo guys, Leggy here and welcome to a new video. Well, I have not uploaded a Trading212 video for absolutely ages, probably the best part of a year. So let's get straight into it. What have we been up to? So in November, I actually sold all my stocks. So why did I do this? Well, firstly, my Trading212 portfolio was getting a bit crazy with individual stocks, and I really wanted to simplify my investment portfolio just to include ETFs, a few individual stocks, and just simplify everything. Because what was happening is that I was finding new stocks. I was like, oh, I want to buy a bit of that. I want to buy a bit of that. Then you do that every month, and then after 12 months, you've got like 150 stocks, which obviously is unfeasible to keep track of. And that's exactly what happened. Secondly, I wanted to basically build an emergency fund because if you've got a stockpile of cash, it stops emotional investing. If you've got everything and you go all in with everything you've got into the stock market, obviously you're going to be more emotional when it comes to upturns or swings or downturns in the market. So I just thought that, we were sat up at a decent profit. So I sold it on the 21st of November. And we ended up realizing a profit of about 2.5k, which is is good considering our portfolio size at that time. So this led to us basically having a about 16k in our cash ISA for a few months, as I'll stick up here. But you actually see the current, what we've currently got in there is about 15k. Why is this? So you guys have probably seen the S&P 500 price action over the last week. Well, I thought that this was a good opportunity to jump back in the market. Now, this is like an interesting one because people always say wait for it to settle because you don't want to catch a falling knife, basically, which is absolutely fair enough. Like you can jump in now and it can just keep on dropping. No one knows what the bottom is going to be, and that is what is making the market have its current price movements. It's the uncertainty. The stock market hates uncertainty. Obviously, you've got the Ukraine war, you've got Trump going in power and putting tariffs on Canada, and making other decisions which are affecting the American stock market at the moment. So a few days ago, I calculated how many days it had been from actually selling our stocks, because we did it on the 21st of November and now it's the 11th of March. I calculated that it would have been 111 days between that and that. My old investment strategy was to invest £10 a day. So basically, I was like, how much would I have invested if I carried on between those 2 dates? And it obviously would have been £1,110. So that's exactly what I've done. We've simplified our investment strategy. So we've just got the VUSA, which is going to be a bit of a weird one to see what happens with that in the next month or so. And we've got our long-term pie. We've got the FTSE World, which is for greater diversification, because obviously it's not affected by just what's happening in America. You've got the rest of the world. Although I still do believe it's got a high concentration on American stocks, but obviously that could change over the years. No one knows what's going to happen. So Berkshire Hathaway is the second stock. So essentially what they do, they have cash income generating stocks, and then they basically utilize this cash in into companies which are valued well at the time. But this is what also made me sort of think about selling my stocks, is that they've been holding a lot of cash for quite a while now. They've literally been upping their cash reserves, and I was like, does that mean that the stock market's going to make a turn soon? Obviously, like I said before, I'd always say that time in the market beats timing the market, and if I wasn't having the reasons I explained before, I'd literally just say, just carry on, just like leave it in and just carry on adding to it, and don't worry about the short-term price movements, just long-term invest. But Berkshire Hathaway, and my previously mentioned reasons just made me think, yeah, I'm going to sell for now. And then we've got reality income, and I've actually had a video before where I explain, deeply into why I want to invest in REITs. So obviously firstly, obviously the Bank of England cut their yields, so that means the interest back on cash held has dropped. I believe Trading212 has gone from 4.9% to 4.5%. Reality income pays monthly, a higher dividend of about 5.6%, I believe. And yeah, that's why I wanted to pick it up. And also, obviously, at some stage, the yields may come down. And when that does happen, I want to be ready for that. So that's why I want to, build. That's why I want to increase my holding in reality income. The yields dropping may not happen for a while, especially with everything that's going on. Who knows what's going to happen in the short term in the stock market, and what's going to happen with the tariffs. But we'll see. We'll see. But yeah, basically what we're doing, we're just going to be inputting £5 in each of those two pies they've got. So £10 a day, and just see where we end up. It's definitely going to be an interesting year. But yeah, hope you guys do enjoy. Sorry for not making videos for an absolute while, but peace.